So after being one of the most hyped stocks on WallStreetBets at the beginning of the year, Naked Brands was able to perform an incredible uptrend of a few thousand% to its highs. When it peaked at prices of around $1.64, however, it started to slowly pull back again. So what we are going to do today is give you an updated insight into what is actually happening to the stock and break down exactly whether it is still a buy at the end of this video. As always, what we want to talk about in the next few minutes is absolutely crucial to know before even considering buying the stock, so stay tuned for that. Before we jump right in, however, just make sure to hit that subscribe button down below. And as we'll keep you updated on breaking news and awesome trading opportunities every single day, subscribing would not only help us but also you. So there is really no excuse for not smashing the subscribe button. It's free, and you can always unsubscribe if you feel so. Alright, let's start talking about the stock. So as said before, Naked Brand is an intimate apparel and swimwear company. The company creates and markets a huge portfolio of brands, catering to a broad cross-section of consumers and market segments. And at its highs, the trading price of Naked Brand's shares fully reflected its e-commerce potential. Yet, and this is crucial to consider for our prediction at the end of this video, with shares back under $1 per share, valuation is starting to make more sense. And this can mainly be attributed to the company's dilutive share offerings earlier this year. The company now has zero debt and $270 million in cash in its coffers. Also, with the planned sale of its brick-and-mortar operations, soon it will no longer be tied down with the challenges that face this industry. Sure, even after its massive sell-off, Naked Brand stock still sells at a premium to this cash hoard. Based on today's prices, its market capitalization stands at around $267 million. But even though it's no deep value play, and this is also very important for the prediction at the end, contrarian investors are willing to take a chance, given its potential to successfully pivot into a profitable e-commerce business. The flip side to this, however, is that finding success in e-commerce will take time. It will take more than just a few fiscal quarters to turn this company into a fast-growing, highly profitable business. And with a long road ahead, investors may continue to cut their losses. This added downward pressure may push the stock to prices further below $1 per share. Yet, while the downside risk remains, it may still be an extremely profitable play for more contrarian-minded and long-term investors. Less overvalued now than it was back in February, the stock looks like a way more worthwhile bet when it comes to risk and return, although shares could easily continue to make another big slide. But if its e-commerce plans pay off, shares are very likely to bounce back to many times what they trade for today. Yet, assessing the odds of this happening, admittedly it's difficult, even with the aforementioned cash reserves. Nevertheless, the company could plow this money into organic growth, while it has the potential to use this money to acquire existing e-commerce brands in accretive transactions. But just having the cash doesn't guarantee success. $270 million may be a nice chunk of change. When you factor in the competition from generalist behemoths like Amazon and large companies catering to this same niche, however, Naked has its work cut out for it if it intends to invest heavily to acquire market share organically. As for bulking up via mergers and acquisitions, the relatively high percentage of M&A deals that fail to deliver value makes an acquisition-heavy growth strategy an uncertain one as well. So to sum it all up, although the stock may continue to head south in the short term, the company definitely has huge potential. And with the big amounts of cash, future growth is certain. So please consider Naked Brand stock a long shot and long-term play, and don't expect it to break out once again in the near term. Alright, with that being it for today's video, however, thank you very much for watching. If you liked this video and want to support our mission of providing free financial information to everyone here on YouTube, please ensure you're subscribed and definitely consider leaving a like. As mentioned before, it really means the world to us. Thanks a lot, and see you next time.